Hi there, and welcome to the latest Nestegg episode. I'm joined today with James Mawhinney. You may have heard of James before on a previous podcast that we've done with nestegg.com.au, and James Mawhinney is the Mayfair 101 Managing Director. James, welcome to the show.
Thanks, David. Good to see you.
The real topic here, and I think the reason why we wanted to bring you in, is there's a massive trend forming at the moment for emerging markets. We'll get straight into it, but I wanted to get a bit of an idea from you in terms of how Mayfair 101 are positioned at the moment, where you see emerging markets coming from and where they are today. And I think an opening question really for that is where would you sort of position yourself in the market right now?
Yeah, certainly. So for the last couple of years, our group's had a heavy focus on emerging markets, perhaps not so much in terms of the sums of capital that have been invested there, but certainly with the styles of businesses that we've been investing in. Given the population growth in the emerging markets, given the GDP growth, given that the internet has become so rapidly deployed across so many villages and business owners and individuals, it was very obvious for us that we wanted to make sure that this was a compelling part of our investment proposition.
It's really interesting for me in a way because I'm looking at this opportunity as an investor with an investment hat on, but also as a publisher as well.
Sure.
And we're thinking, there's so much room for growth in, say, for example, we're talking around India, take that for example. But when you look at the market compared to US markets, which are very sort of maybe some say expensive, maybe overvalued at this stage, you look at where the US has been over the last few quarters, and I've kept an eye on this in the economy as well. They've had an outstanding growth period, maybe more so than you'd expect, around that 3% mark, which really any country is kind of looking at 1.5% for inflation growth. So this is total what we sort of look at across for the whole country. So to keep that going is almost, I would say, unsustainable for the near term. But to then look at other countries such as India, where you just think, wow, there's so many different things going on there on a technology boom. I'd love you to tell me a little bit more about that and what your aspects are there too. But also just the real development of growth now starting to come into fruition for those countries. So let's take India, for example. I know that you're looking at that at the moment as well, but how are you sort of looking at that compared to where you place the US market, the UK market and Aussie?
Yeah, sure. So I think a lot of it has to do with how much potential for further upside there is. If you look at the likes of the developed markets, say using the United States as an example, there's not too much more headroom for that location or country to continue with the rates of growth that they're having. They are called developed markets for a reason. Emerging markets are called emerging markets, obviously, for a reason. The likes of India is coming from having literally hundreds of millions of people not even connected to the internet, in some instances not even having a roof over their heads. Along has come the internet in more recent times. Mobile phones, huge amount of connectivity has occurred, particularly in the last decade, and along with government initiatives that have seen now Wi-Fi commitments for Wi-Fi to be connected to 600 million Indian nationals in the next couple of years. It's these initiatives and just the groundswell of connectivity that's been taking place that has really created so much more opportunity. And if you look at not just the connectivity that's taken place, but what that means then for business owners. And when I say business owners, typically in these markets, it's micro SMEs as opposed to just SMEs. So it's the 1, 2 or 3 man show that might be driving a rickshaw or making scarves that are sold on the side of the road. They're very, very small, and that's what they're called micro businesses, that have so much scope to scale up. And if you look at that by comparison to the United States, it's a much more developed market, again, less headroom in those more developed markets.
I think the interesting point is, and this is for the investors out there thinking, well, one, I kind of know what the emerging market side is, but comparing that to where we are in the Aussie market for domestic equities, for example, it can always be one of those things of comfort for an investor where they know the companies, they know exactly what these businesses do for years and years, they've been buying and using their own goods and services themselves. It is really a case of doing some education across to when you look at those businesses, because you could have the Indian version of Nike, which is like growing at these amazing rates, but you have a market cap on that business which is very, very low compared to Nike in the US. So it's all about cost basis as well, I'm guessing, which is a massive point for investors where they want to get in a market as well.
Yeah, no, it is. It's cost basis. It's also exposure. I mean, we know firsthand, having paraded Indian companies up and down Collins Street and in Sydney to the brokers, and they're going, great business. Love the fact that in one instance they've got a very close alignment with someone like a major credit card company. But the local Australian community is going, but we've never heard of them. How do we know that it's actually real? our role in what we do as an investment manager is that we identify these companies, and in developing our portfolio, gradually over time we've started to give the investment community, particularly in Australia and more recently in the UK, the ability to actually get exposure to these businesses. So we're travelling on a regular basis to India and obviously other developing nations too, because we have found certainly there's a big gap, certainly in the Australian market, with the average Aussie investor that has probably read on a newsletter something about emerging markets or heard a finance professional speaking about emerging markets, but they just don't know how to participate in it. Our group's obviously sitting well positioned to obviously fill that gap.
And I think the incredible thing as well is that you're on the ground. You're kind of looking at these businesses yourself, and I think as an investor, more and more with what happened with the Royal Commission in the banking sector, people want to know what their dollars are doing, and people want to know exactly how their investments are taking shape. So to sort of, you're on your side as someone that manages the money in the fund, looking at how that works and meeting these businesses, understanding their financials, looking at their trajectory as well, that's a really important factor. So it's good to hear that you do that. I think looking at the valuation of Australian businesses and linking that with now the evaluation of our dollar, we've had these massive cuts at the moment, and we're in this weird trajectory at the moment, which is slightly moving into the low interest environment. The lowest in historical periods is maybe even on the cards as well. And I think we had a 33-month break of that 1.5 RBA cash rate, for example, and that dropped very recently. But to see that, would you have an idea if that's a trend in the market now, or are you looking at that as maybe that is the plateauing point?
I think it's the latter, it's the plateauing point. If you look at what's happened in the UK and Europe, interest rates have been low for a long time. You put money into a savings account in certain European countries and you're actually getting negative interest. At a very basic economic level, there's an oversupply of cash and not enough investments. Oversupply of cash, not enough investments means low interest rates, and that's the situation that we're in at the moment. Some of that's due to overprinting of money, we believe. We see that there's a big opportunity, however, to really fill that gap between the banks, which are happy to pay 1% and a bit interest on term deposits, and those companies that need access to growth capital. If we relate it back to your point about emerging markets, there's interest rates in India. You put money in a savings account, you could be earning 6-7%. In terms of then business lending, it's not unheard of business loans being done at 30 or 40%. We have portfolio companies that lend money out what we call responsibly at rates of around 20%. So we see that there's an opportunity to effectively be a conduit between the low interest environments such as Australia and the United Kingdom. In Australia we do it with IPO Wealth, in the United Kingdom we're doing it with our brand M12 Global. We've got this conduit that enables us to give Australian investors the ability to participate in helping effectively fund these growth markets where they've got this absolutely insatiable desire for capital. And to give a bit of an idea of numbers, there's a $330 billion credit gap in India. In other words, they could consume that money in the next 12 months if they had access to it, which they don't at the moment because the banks simply don't lend it.
It's incredible, and I think there's always been the argument of, from every single person I've ever spoken to, and from all the articles I read, is how diversification is key, which I'm very, very, of course, a very firm believer of. But I think when you're looking at diversifying within an Aussie market, you're kind of letting yourself onto a way where you're not really opening up to the broader horizons. You know, there's a whole world out there. And I think that's a really important factor to say, like you mentioned, different countries pay different cash rates, different companies are worth different amounts, and cost base is what we come back to, especially within emerging markets, is what I always hear about in that most interesting point of where people come into it. Going back in a way to sort of how investors can get involved, particularly with Mayfair, is the fund or the particular emerging markets initiative, is that live at the moment? Is that something which you've been building over how many years or so?
Yeah, certainly. So IPO Wealth has been positioned as a product to provide investors with an alternative to cash products. We're not a cash product ourselves. We have a different risk profile, but we've certainly proven the demand in raising. We're over, I think, $115 million that we've raised since we set it up a couple of years ago. We expect that growth trajectory to really continue. In very recent weeks, and very shortly we're about to announce the fact that we're going to now open up the ability for investors to actually invest alongside Mayfair 101, which would give them direct exposure to certain companies that we've invested in, including those in emerging markets. What we're finding is that the feedback, at least in the Australian community, is that investors are fed up with hearing about property funds, property development funds, because both of those tie into the real estate market, which obviously isn't in such a good position at the moment. They're then fed up obviously with putting money in a bank because they're getting rates of return that are sub 2% in most instances. So there's this big demand for new places to invest, but investors are obviously a bit gun shy of where to put their money. Yet there's this big, as I said earlier, insatiable demand for capital in these emerging markets. Our portfolio again has a smallish percent in emerging market. It's well under 50%. It's probably off the top of my head under 30% or thereabouts. But in terms of the capital growth that we've been able to achieve with a smaller amount of money that we've put into these markets, it's very exciting to be involved in. And that's why we're now, as a group, starting to open up the ability for Australian investors and over time investors in the UK actually to directly invest alongside us with some of these great opportunities.
I think that's always one thing. Investors want to diversify, but they also want access. Limited access into certain opportunities, which I'm aware of, such as that, is actually quite interesting to see, especially in that emerging market sector. One thing as well, which sort of brings us to the conclusion of this, and having that kind of idea in terms of getting into that kind of market. Have you seen at the moment, and this is maybe just more of your opinion, as I know you're a big advocate for investor education, but at the same time, have you seen maybe a bit more of a, I don't want to say maybe scare or panic about the market, particularly between US and China and even and sort of coming into the Aussie markets as well? Have you seen much of a development maybe that we might even be going into some kind of recession or economic slowdown?
A great example, as someone rightly pointed out to me earlier, there's more money flowing into savings than there was in previous times. Money going into savings indicates people are tightening up the purse strings. If you look at the factors, whether it's UK, US China, Australia, US trade negotiations, whether it's low interest rates, and people getting a bit unsettled by that because there's less opportunities to invest in, and then the property market obviously coming off the boil, people are tightening up their purse strings because they actually don't know where to invest. As a result, that's obviously creating opportunities for groups like ourselves that are able to educate, to your point earlier, creating education around what these alternatives are. Outlining what alternative investment strategies there are, whether that's in terms of obtaining capital growth in their portfolio or just obtaining a regular income stream. Groups like ours that are really playing in that market of alternative investments, but well pre-vetted businesses that we've seen with our own eyes that we manage. In many instances we actually have a controlling stake on or seats on the board of. So we're very well aware that this is the direction that the market was going, and the catalyst really for it was interest rates remaining where they are, and we knew inevitably they were probably going to drop, just like they have done in the UK and in other markets too.
Yeah, absolutely, and it is that kind of ricochet effect across other markets across the world, like you just mentioned. It's amazing to see that you can even in some way have a correlation between development and that scaling with scalability and growth into your investments as well. And I think when you do look at these developed countries, such as the US, take that for example, and like I said at the beginning of this conversation, that amazing growth rate they had in their inflation and GDP at that 3% mark, and how they might be able to sustain that is very tough and tricky, and to still sort of back that horse in a way, or even look at that in an investment angle and educate yourself, when you know that it's really tricky to sustain such a rate, and you're going to expect maybe a bit of a cool down on that. It's always interesting to look at actually what else is out there in the rest of the world, which is kind of growing.
I mean, Australian investors that are used to putting money in the bank and earning 4 or 5% consistently, you've got $1 million in the bank, you've got an okay cash flow coming in at that, $40,000, $50,000 a year. Some people can live off that, certainly better than the pension in most instances.
Yeah.
You take that same $1 million, which by anyone's means is a lot of money, and all of a sudden you're now in an interest rate environment where the average is, I think it was back in March, you're getting about 1.9%, so you're down to about $19,000 a year, and by the time you take out tax and other things, you're in a position where you actually really don't have much to live on. Maybe it's $1,000 a month net. So we're in a position now where investors are forced to now start looking for alternatives. There are definitely options in emerging markets, just as there are many options in developed markets, and obviously it's about having the right mix. So we I personally think we're in a very exciting time to be alive because there's a lot of change. The velocity of money that's been rapidly increasing due to technology and, as I said, connectivity earlier. Great time to be alive, and very happy to be in the position that we are with the opportunities that we've got.
Yeah, absolutely. James, as always, thank you very much for coming on the show. And I actually want to say congratulations on the actually seeing in the eye to actually understand how these markets can be quite savvy and interesting for the investors in today's market.
Great, thanks David.
No worries.
Appreciate it.
And if anyone else wants to check out or register any interest in James Mawhinney or Mayfair 101's interest over in emerging markets, you can check out on the links below. I would also commend looking over at James Mawhinney's educational insights, which is across the Australian platforms, but also as well on nestegg.com.au. And we're going to be talking about this not just once, but a few times. So follow it, see what you think. And if you have any comments, let us know at editor@nestegg.com.au. See you in the next one. Cheers.